Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. All right, let's reset and get this right. Today we're diving into SoFi Technologies, ticker symbol SoFi, and taking a live look at the stock midday on Tuesday, October 14th, 2025. My goal is to walk you through what's driving the price action right now, what could impact SoFi over the rest of the week, and the key levels every trader should be watching closely. So starting with the overall market mood today, there's a lot of uncertainty in the air. We've already seen a few major banks report earnings this morning, and the results have been mixed. Trading revenue came in strong, but there's cautious commentary around loan growth and the health of the consumer. That combination has put a bit of pressure on the broader financial sector, and naturally, SoFi is moving in sympathy with that tone. Another thing keeping investors on edge today is the Federal Reserve lineup. Several Fed officials are speaking this afternoon, including Neil Kashkari, who's known for being on the hawkish side. And you know how that goes, every single word will be parsed for clues about what the Fed might do next. If the tone sounds even slightly aggressive on inflation, growth-oriented names like SoFi could feel that pressure in the short term. So, I'd say expect some intraday swings as those headlines come in. Looking ahead to the rest of the week, the macro calendar stays pretty active. Tomorrow we get the New York Manufacturing Index, Thursday brings the Philly Manufacturing Index, and then Friday wraps it up with the Industrial Production Report. These data points will help us gauge how the economy is holding up right now. If the numbers come in soft, markets might actually cheer that, interpreting it as a sign the Fed can stay on pause. But if it's too soft, that flips quickly into recession fears. It's one of those classic bad news is good news until it's too bad situations, and that tug of war is exactly what's shaping investor sentiment this week. Now, focusing back on SoFi. As of this moment, the stock is hovering in the $27.04 range, down just slightly on the day. The price action tells a simple but important story. We're struggling to reclaim that crucial pivot point right around $26.98 to $27. That's the line the bulls really need to push above to regain short-term momentum and send a positive technical signal heading into earnings. SoFi itself doesn't have any major company-specific catalysts on deck this week, which means the stock is pretty much trading based on broader sentiment and technical levels. There's still some quiet chatter floating around about a potential rewards revamp or a premium SoFi money tier, but as of now, that's just speculation. If the company were to announce something official before earnings, it could serve as a nice short-term boost to confidence. But for now, this feels like a classic pre-earnings pause 2 weeks out from the big October 28th report date. Now let's get deep into the technicals, because this is where the story for today is being written. The key resistance zone sits right at that $27 level we're currently fighting. If SoFi can push and hold above that on meaningful volume, the next targets come in near $27.90 and then a more significant level at $28.65. On the downside, initial support sits around $25.15, which is particularly important because it lines up almost perfectly with the 50-day moving average, currently around $25.59. That's your line in the sand. If the stock loses that level on a closing basis, it would mark a meaningful shift in trend and open the door to a retest of the 2430 zone. Diving deeper, the Relative Strength Index, or RSI, is sitting at about 47. For those who are newer to technicals, the RSI is a momentum indicator, and a reading between 30 and 70 is considered neutral. So at 47, it's not overbought or oversold. It's telling us the stock is in a neutral state, which supports the idea of consolidation. We're also seeing that the stock price is below its shorter term 10-day and 20-day moving averages, which indicates some bearish pressure in the immediate term. However, the price is still comfortably above the longer-term 200-day moving average, which sits way down near $17.60, confirming the long-term trend remains bullish. Let's talk shorts for a second. Current short interest sits around 7.8% of the free float, which is moderate. What stands out is that despite recent market weakness, there hasn't been a big spike in short positioning. The cost to borrow shares remains low, suggesting there's no aggressive push from bears right now. That tells me most of the recent selling pressure isn't panic driven. It's more about general de-risking across the market and some algorithmic activity reacting to broader volatility. So, putting it all together, I see SoFi trading in a range between that $27 pivot and the 25.15 support zone tied to the 50-day moving average. I wouldn't be surprised to see a quick dip down to test that support, especially if Fed commentary turns hawkish or if manufacturing data disappoints midweek. The question is whether buyers step back in once it gets there. If I had to give my outlook for the rest of this week, I'd say we're likely setting up for a consolidation phase, probably closing out the week somewhere near the mid-26 range as the stock builds up energy ahead of earnings. That's not a bad thing. It's healthy for price structure before a potential catalyst. But if that 50-day support breaks, we'll have to reassess quickly. And before we wrap up, it's worth keeping an eye on analyst commentary. Don't be surprised if someone issues a cautious pre-earnings downgrade this week. It's a common play to shake out weak hands before results drop. The Wall Street consensus is currently a hold, with a wide range of price targets from as low as $12 to as high as $31. Still, the fundamentals haven't changed dramatically, and institutional conviction seems steady so far. So, that's my full view on SoFi heading into this week. Tight range, macro-driven moves, and a technical setup that demands close attention. Share your honest thoughts with me in the comments. Where do you see SoFi closing this week? And if you enjoy this kind of real-time, grounded market analysis, consider subscribing and being part of the community.